SJS Enterprise in focus this morning. They've signed a technology license and supply agreement with BOE Varitronics to enable optical bonding and assembly of automotive displays in India. In fact, Mahima is joining in with more on that tech transfer.
Right. Tamanna, as you rightly mentioned, the agreement that they've entered into basically is, covering overall the optical bonding with regards to assembly of automotive displays in India. And this will supply bonded display systems for four-wheeler customers in India. BOE Varitronics will provide key components and localization support, while technology transfer includes training as well as manufacturing, testing, and quality expertise. Just to give viewers about what this acquisition means, just a brief about BOE Varitronics. It's a Hong Kong-based investment holding company under DASBG, and this is primarily focused on automotive display modules. It is a sole sales platform of BOE Group for automotive businesses. Now, just to give a perspective of what outlook SJS Enterprise has given for FY26, the company continues to see its strong financial performance trajectory. It expects to outperform underlying industry growth over 2.5 times, and current order book to be executed in FY26 is over 90% of FY26 forecasted revenue. So this is the overall view of the acquisition and what outlook for FY26 holds for the company.
Thanks, Mahima. And we're going to quiz Mr. Thapar on that, because this outperforming the industry growth rate by 2.5 times was a number that was revised in the Q2 con call. So they've actually ended the first half and then upped their guidance, which means that they are fairly confident of the second half. And we'll come to that as well. Mr. Thapar is Group CEO and Executive Director of the company Johnson right now. Thank you so much for joining in, Mr. Thapar. Really appreciate your time. This is Neeraj Shah here. Good morning. But just before we get to the guidance and the outlook ahead, a word on this BOE Varitronics TLA, right? What's the rationale for this? What does it bring to the table for SJS?
So BOE, what it does in simple words is it brings global automotive display technology to India through a trusted partner. So we are well entrenched an auto component specialist with localization benefits in India. So with this TLA, we hope to bring advanced display manufacturing capabilities closer to the Indian consumer, Indian OEMs specifically, and participate in this big technological shift that's happening from traditional clusters to a digital cockpit.
Now, I believe there is a plant commissioning at Hosur with regards to the BOE TLA, if I'm not wrong. And by the way, viewers, TLA is technology license and supply agreement, if I'm not wrong. So, Mr. Thapar, what is the timeline for this particular thing, and how critical is it for your overall numbers, either revenue, profitability, or content per vehicle, as the case may be?
So SJS is an aesthetic automotive component specialist, and what it does for us is moves us up the supply chain. So we will now be entering the area of intelligent cockpits. We already do decorative parts for the cockpit, and this is going to enhance our capability and increase a large TAM for us moving forward. Vehicles today, or at least the futuristic vehicles that are coming today, are digital cockpits. So it's all about the cluster, the infotainment, the touch screen, the overall user experience, and that defines the buying behavior and the need for features for the Indian consumer. So we will help localize these displays, which are largely imported as of now, to bring them to the Indian market and be closer to the OEMs. So that means faster, quicker, and better quality. So we will address this huge demand that is going to explode or drive the growth for the display business in India.
Mr. Thapar, very good morning. Tamanna here. And, you've seen there's been a lot of excitement from brokerages as well about your company as the space grows. And you've explained well what exactly you mean when you say the aesthetics of the company, so displays, etc., and all of that. What is the outlook looking like in terms of new orders coming in for you? Are you tapping? Is there more scope for growth within the Indian OEM ecosystem, or are you going to look at more global partners coming in. What is your strategy and outlook there?
So Tamanna, the way we position the company is that we are a design to delivery company with more than 14 technologies and products to offer. So we supply to virtually the who's who of the Indian automotive industry, both four-wheelers, two-wheelers. We have a very large global footprint as well. We export to 20 countries. So SJS is a well-known name, and we continue to cross-sell products in the Indian market. We continue to tap large global OEM for global programs. So we've been fairly successful. And moving forward, we see that this trend will gain momentum because OEMs would like to deal with fewer suppliers who can offer them more products. And SGS fits right there.
Split between two-wheelers and passenger vehicles is veered towards two-wheelers a little higher right now. Do you see that trend continuing? What are the strategic areas that you're going to delve into in terms of new areas across 2026?
So we are expanding capacity quite rapidly. So we have a new plant coming up at Ranjangaon in Pune for our chrome plating and painting business. We have this new plant in Hosur for the display business. This plant should be operational in FY28. So we continue to see strong trajectory of growth, both across our traditional product lines. So our parent plant is in Bangalore. We are investing there to expand capacity as well. So overall, we are quite bullish on the export outlook, both in the domestic market and for exports.
Do you see, as a result, margins continuing? I mean, last quarter you had a good bump up in margins, and I'm just trying to understand, as you have more localization coming in with the latest deal as well. What you explained was, cutting down on imports and more localization coming in. How is this going to help in terms of margins? Is it going to be margins accretive? And what is the range that you're looking at for the next quarter and the rest of the financial year as well?
So we've been steady in delivering margins north of 25%. So last quarter, we were close to about 28%, 29%. So I would imagine that our trajectory should continue to be consistent because these are unique products that add aesthetic appeal, and we have a very strong manufacturing capability where we continuously drive costs down within the company as a mission. So I'm quite confident that we'll be able to maintain our margin profile close to about 27, 28%. That is the target that we have internally, and we hope to deliver on that.
Mr. Thapar, as I look at your numbers, scan through the con call, etc., I mean, you are doing something very interesting. Your ROCs are very strong and on an upward trajectory. You mentioned your margins are on an upward trajectory. You've just revised your guidance higher at the end of Q2. Are there some medium-term targets that you've set for yourself? It could be FY28, it could be FY29, FY30, whatever, or in terms of both the revenues and the operational metrics or profits, and for the return ratios that you may be enjoying right now or will enjoy in the future?
Our focus really is to diversify our business, not to be over-dependent on one product line, not to be over-dependent on one segment. So we are largely equal weight on two-wheelers and four-wheelers. Moving forward, we are tapping the exports markets in a very major manner. Those are largely four-wheeler driven markets. So we have a very strong portfolio in four-wheelers as well. So what we have guided the market is that in FY20, by FY28, 14 to 15% of our top line should come from exports, which is currently about 8.5%. So that directionally is where we are moving to by offering more and opening global markets for us and our products, and then going on to cross-sell these products. So what our product portfolio helps us really is with the very quick cross-selling of what we have to any new customer that we take on board. So that is our overall game plan, and we hope to drive that for the next 3-4 years.
Okay, so that's a beautifully crafted insight into what you think. Is there some numericals that you want to attach to this, Mr. Thapar, based on where you are in H1 FY26 or FY25, some numbers that you might reach by FY28 as a result of all that you are doing?
I don't give a forward guidance in terms of absolute numbers,
Okay,
but saying
CAGR
that
growth rate?
we will perform. So we are looking at doubling sales in the next 4 years, if that gives you a sense of which way we are going.
From FY25
So-
to FY29 or from FY26 to FY30?
Take your pick, but yes, the next 3 to 4 years, we hope to continue that growth trajectory that we've had in the past.
No, sorry, just so that our viewers get the clarity, what you're saying effectively is that you are targeting that where you were in FY29, FY25, you'll double your sales from that number by FY29. Would that be a fair assessment?
So last year we were about 760 crores in terms of top line. We hope to double that. So what we were in FY25, I hope to double that in the next 4 to 5 years.
Next 4 to 5 years. Okay. On better margins, better return ratios, so on and so forth. Okay. Final question from mine. Any fundraising exercise that you might need to do, Mr. Thapar, for executing all of this?
Not really. We generate strong cash flows. We are sitting
Okay.
on a pile of cash, looking at an inorganic acquisition somewhere next year. So at the moment, we have no agenda to raise any cash from the market.
Any more acquisitions or partnerships, Mr. Thapar?
Yeah, mostly. So we've done 2 acquisitions in the last 4 years. As I said, we are fairly conservative in terms of borrowing. So internal accruals is what we turn to. So we will look at another acquisition in a year from now. That's what my guidance is. That's what we're looking at. So let's see that we get the right target for the right reason.
Okay, so you are looking at an acquisition in the next year. Is that
We are.
what I should
That is
make of
right.
it?
We are
Okay.
right.
Okay, all right. Thank you for that, Sanjay Thapar there of SJS, talking about the outlook for the company, an exciting company to look at as well.